Traders, welcome back to your today's market. We're going to jump in and start talking about some fundamental stuff. We do have Trump. He has picked a new member for the Federal Reserve seat. This is not one that's going to replace Powell. It's just one that's on the seat, and this is going to be definitely important to understand Stephen Moore, his psychology, how he sees the market, how he views interest rates. And most likely, that we know Trump likes lower rates. He wants lower rates to try to stimulate the economy. We know he's probably going to bring somebody in to, this Federal Reserve board seat that has the same views. That's kind of how he obviously would operate. That's what he did with Jerome Powell. Like when he first elected Jerome Powell to be the Fed chairman, he was, he thought Fed Powell would, stimulate the economy more, but there's other risks that he has to pay attention to. So Trump is always trying to bring people in, obviously, who have the similar mindset and are going to kind of listen to him. Why wouldn't he? So it makes sense. Some other stuff. Let's see what else we have going on. Really, not much. We do have still have some Brexit going on, but as you know, you guys, she is being pushed to resign to get that deal passed. But that is something we are going to need to wait on to try to understand, more of what's going on, and just understand if this deal will get passed if she resigns. We can jump over into the charts right now. We always jump to the indexes first. So jump to that U.S. dollar index. We do see it's still pretty consolidated at these lows, just because we had that sell off from the news. We had that retracement from some risk aversion. So we're still kind of sitting in between here, possibly waiting for some data. But we do have Fed. He's a Fed Harker, however you say it. But he did come out. He's talks about there's still maybe a rate rise. This is it's not something to take take it with a grain of salt. This is his opinion, but if we start to see maybe more Fed chairmen start seeing the possibility that there could be a rate rise despite the risk, and that kind of mentality, that is something we're going to want to pay attention to, because they are on the board with Jerome Powell. So it's just a little insight to their brains, what everyone is thinking. Doesn't necessarily mean that's 100%. So we can also check out Fed Evans. He's again on the chair. See what he had to say. Sometimes it could be just nothing. So let's see. Fed Evans says inflation could run up to 2.5% before rate hikes are needed. Our inflation right now, it's not high at all. Where are we at? We're at 1.5, and you see we've been just continuously trending down. It's pretty crazy, in the last year, less than a year, when we were at 2.9, and all of a sudden we're down at 1.5, which is, this is pretty interesting stuff. So, we could see this is just another dip before we kind of continue higher, another dip before we continue higher. This could possibly be that, but we're going to need to pay attention to oil prices, which have been rising, which could carry over into the inflation, because you have higher prices for oil. Oil is used in everything, from plastic, your plastic water bottles, your shoes, and it just gets passed on to consumers, because the producers have to buy that oil. If they have to buy it for more, that's their product, that's their margin, that's eating at their margin, so they're going to most likely pass that on to consumers. That means the prices are rising, and that means we're going to be spending more on these products. So this is not something we're not really trying to predict the inflation rate. It's just something we want to watch for. We can jump back to, so Fed Evans was talking about that. Could rise to 2.5%. So obviously, since this inflation rate was so low, I feel like it's gonna take a little longer, for them to raise rates. And they're definitely going to want to see this inflation rise, because central bank target for inflation is usually around 2 to 3%. 3% is usually the upper bound. 2% is usually the lower bound. So they like it in between there. So let's jump back to these charts. Let's talk about that NZD. So we did break this little region. We are kind of trending up. A lot of this is going to be based on if some of the China trade talks continue to progress. We haven't really heard much that I would be comfortable with going based off of. And kind of just look through here, not much. It's kind of interesting that they send 2 warships before that, so that might be something to pay attention to. It could possibly set off China. Imagine if someone was just marching on your doorstep, with 2 giant ass ships. But China does the big thing we are looking for with these China trade talks is China, wanting to actually see an agreement. They say that, but you got to understand the U.S. is wanting to pretty much reform their whole kind of economy, or how really what the Chinese economy is based on. And that's they've been doing this intellectual property theft for a while, where U.S. companies will be able to the U.S. companies are going to be, they can go and they can start businesses in China, but the Chinese are trying to kind of pretty much steal their their ideas, their thoughts, and that's kind of how the Chinese have gotten an edge, especially with technology the last few years. So it's very interesting, and I can see why that is kind of a problem, especially at a higher level. So really, what we do like is this yen. I just talked about this yesterday in the breakdown. We were up at these high. We broke the high. We ask ourselves, there's not much risk or risk on or risk off coming into the market, so we weren't really expecting a break higher at this point. We did get this break way down here. So I said yesterday we're expecting to see a retracement. I do still think we can get lower into this 61.8 and then possibly push up. But the only way we're going to push up is if we get some of that risk off. Something with China. Maybe an escalation. Worries over this recession, which I don't think is imminent, but I do see it in the future. So this is something we're going to pay attention to. I will be, letting everyone know in Slack if we do see any setups across, the actual currency pairs. Let's jump to the pound. Pound is still, definitely can see us up at these highs. Not much Brexit data on. We will see if there's anything though. So I guess we do have a live thing. Let's see what it is. May claims the power as UK Parliament seizes control of Brexit. Brexit delegate MPs take control of process from Theresa May. So it does sound possibly like the Parliament or Theresa May's party is trying to kick her out and possibly try to take control of this Brexit process, which might be why we are seeing some bullishness in the pound right now. So this might they're probably starting to think that there's some optimism that we got some better control of the Brexit. It's good news, really. As long as they can avoid that no deal Brexit and the uncertainty, I think we're definitely going to see some more pound strength. But we want to see more what actually is going on, which I will let everyone know in the group as well. So let's jump to that euro. I think euro has, let's see, it's still consolidated at these lows. So this is some way we will watch. Not really much of a trade right now. We do like the consolidation. If we do get a pop back up, I do feel like this, this sell-off was a kind of a weak leg. So I do think we could possibly retrace back to this 56 level. So we can just let's extend, let's box out. But, we're going to be waiting for a catalyst, most likely. We don't always need a catalyst. So this could just be, one of those liquidity plays or those market inefficiency plays. Jump to the Swiss franc. So this is something I do like to. I did put long in the fundamental breakdown, mainly due, just to the setup. We did break out of this range. We could possibly come back down and retest it more. But overall, I do like it at, to this 224 level. But, I want to see, what's going on in the economy more. I want to see some stuff aligning on the currency, the actual pairs as well. See the CAD quick. I'm pretty sure this continued to, well, I guess, let's see, where do we open? 25, 24. So I guess we still are consolidated at these lows. Not much of anything right now. We do have OPEC continuing to see, there's, they want to stick to the production cuts, but they're kind of fighting, that, these global economic slowdown fears. So it's kind of getting tossed around. But the main thing is we need to pay attention to is if OPEC is gonna stick to what they're saying and can stick to these production cuts. So that's Saudi Arabia. We need to pay attention to Russia. There's also sanctions that the U.S. has issued on Iran, which also can affect oil prices. So let's jump to this Australian dollar. I know we are still consolidated at these lows. So not much really. We're still in this range. So we're really just gonna need some more data to go off of. JPY though, um, you know, if we get that pushed down lower into that yen index, this could possibly be something that we could play short. We did make this large retracement back into all this consolidation. So there's a lot of activity going on up here. It cleared out this whole sell off, this whole leg pretty easily. So I will be watching, this odd JPY, but I'm not going to just enter just yet. We need to stick to that strategy. We need to stick to our, that mean divergence, that parabolic move, that consolidation, and possibly a catalyst that'll push us in the opposite direction. So nothing as of yet. Let's see on the Euro USD, we're still a little different than the index, but really not much at all. I possibly some more retracement up into this 1360 level, but we will wait on that as well. Let's see. We got that USD JPY. Possibly, I'm expecting this, to continue to buy up, but possibly only until this $1.80 or this dollar or 110.80, maybe 111, and continue to push lower. So this is something we're going to pay attention to. We did come down to this zone. So once we get back into this 111 zone, I'm going to definitely be paying more attention to it. We do have, let's draw that up, draw it to about here. This wick kind of distorts everything. So let's jump, probably back into here. So we have that 23.6 right there, hit that 50. So you obviously know this is kind of a range somebody was looking at. We did have structure, so that's probably most likely why as well. So let's see if we can come back, get a retest of this 23.6, look for some opportunities inside of that, and this could definitely play out well. This is kind of a longer term play, but if we get up in here and can hold this level, it is a very well possibility that we could push even lower, and this would be a giant swing that I would love to push out to the community. But as of right now, that's not, we're not going to be playing that. So we got to be patient. Let's see. USDCHF. Cleveland did talk about this in the money market or that breakdown on the YouTube. So we are still consolidated at these lows. It is possible. Let's see if we can get some more consolidation. This would definitely be a nice play if we did get some more consolidation at these lows. Under this 23.6, we could definitely get a break up into this 38.2. But is this something we're going to play as of yet? Not right now. So this is another position we will keep you posted on. So guys, remember, it's all about patience. I will keep everyone posted in the group. We do have a lot more videos coming out. We had a request for looking at the VIX and how to apply it to trading in our strategy. Really, basically, the VIX is just the volatility index. It measures volatility in the market. But that I will be doing a video on that. I will be doing a video on the recession or the yield curves that everyone is hearing about, and the inverted yield curve. Doesn't there's something to pay attention to, but it's not. I guess with us, we're not going to be basing trades off it, but it is nice to know about. So that's really it for today, guys. If you have any questions, hit me up in the Slack. I'm here for you guys if you guys need any help. So I will see you guys tomorrow.